In this lecture, we are going to talk on SOX and some other financial acts. Let us start with SOX. The Sarbanes-Oxley Act of 2002 became law on July 30, 2002. This law is also known as Public Company Accounting Reform and Investor Protection Act, Corporate and Auditing Accountability and Responsibility Act, Sarbanes-Oxley, SARBOX, or just SOX, SOX, SOX. The law was named after its sponsors, U.S. Senator Paul S. Sarbanes and U.S. Representative Michael G. Oxley. The bill was created after companies like Enron, Tyco International, Adelphia, Peregrine Systems, and WorldCom committed major financial scandals. If you are interested to know the details of these scandals, you can just type in Google Enron or Tyco International and then you can check that out. The law regulates the standards for all U.S. public company board of directors, management, and public accounting firms. The Securities and Exchange Commission, SEC, oversees the enforcement of this law.